Hello everybody, Brian here from quantlabs.net. Just wanted to come about and let you know some of the changes I've made to the strategy. The first one is the trending spreadsheet that gets generated. My initial from a few weeks ago did not work properly when I started working on other pairs. And the time periods are the same, but the amount of currency pairs now has expanded. Originally it was 11 or 12, and I've got now up to 35. Also, you can see here I've changed I'm measuring slope. I'm still experimenting with this because it doesn't seem to be all that accurate. This is generated from polynomial, and that's in a NumPy Python package, and I'm going to still be working on that. I'm going to probably looking at linear regression as well, but that needs a benchmark to or compare it against for a correlation as well as R squared. So I'm going to see what this other function can do as well. So we got 35 pairs here measuring the slope. Same idea, whichever one gives us the steepest slope has a higher long-term trend, and then we could do it also by hourly and 4 hour. All right, so we still have the stats. And the other period has been changed from 500 trading days to 1 year's worth, 240. So the stats I'm keeping at 500 because I just find the more the data, the better to work from there. And that will also give you a longer term view. So that's still 500, which works out to just under 2 years worth of data. Okay, so the next thing that I have looked at is the FX pair ranking. Now, this is the ranking right now of the 35 pairs, and it's really messed up. If I was to show you, let's say, sort by slope, so we have here the same as before. We have the slope instead of the way I was doing it with the 500 day, and again, this is a 240 days end of day data. This one is measuring the moving average of 200 cross EMA over a 50-day moving average. This one's from the stats of which has from the stats number of positive returns daily, and then I make a little formula. I'm still playing with this because it's really screwed up, so I might have to put some other metrics in there, and the results are just way off. So that is what I'm doing there, as well as we also have a portfolio ranking which has been completed, which I showed late last week. So basically what it is there's two ways to look at these results. First, we have picked our from the pair ranking the top 3. That's how it should be when we get it working. So we have Australian Japanese yen, Australian Canadian dollar, and Australian Swiss franc. Or am I getting that right? Let me just do a sort here. So we need column F for the results. Descending. Okay, there we go. So yeah, something's really messed up here. Anyway, so we would usually, once we get it working, we take probably top three, top 5, and feed it into another script that will generate this. So in this case, it did a comparison of these 4 pairs, combination of 2 pairs the Australian Canadian, Australian Swiss franc, and then the third iteration would have also the Australian New Zealand, a third iteration with the all three of those plus the Canadian and Swiss franc, and then there's one with five. You can see here, right, where I added in the Canadian Hong Kong dollar. Now, as I said regarding this portfolio ranking, I've shown that on Friday. Let me just show you on that. Let's go over to my YouTube channel, youtube.com/quantlabs. All right. Oops, that's not what we want. We want the other. Yep, no, that's fine.
Hey there.
Okay, so if you go under videos, the tab, everything started on February 23rd, I believe it was. Oh, here we go. This one right here called New Technical Analysis on Many Forex Pairs. This was the video that started this whole journey, and I'm just reporting back of what I've added and changed since then. The statistics has not changed at all. There's a statistical view somewhere in there. And here we go. Updated statistical view on many Forex pairs, as well as there's a moving average one as well. Okay, so there's a variety of videos in there to show you how we get to this point that I'm showing you right now. So I think it was on Friday. So this particular video I put out 3 days ago, combining best performing Forex pair should hugely increase your expected return and Sharpe ratio. This is very true. Now in that video, what I did say was when you combine your just a two pair, you will get usually the highest expected return. As I said, there's two ways to look at this. If you are just trading for yourself, obviously you want to have a higher return. If you are just trying to trade for other people, managing other people's money, usually they'll look at your Sharpe ratio as a way to measure your performance on the strategy. Here, I just want to show you, usually if we have two pairs, like here, Australian Canadian and the Swiss franc, here we have, there was one instance where I did show, or did reveal how you could have four pairs have the higher expected returns. So, you know, you could play with this script and cross combine a variety of different pairs to measure your expected return, expected Sharpe. The Sortino I keep in there because if you have a highly volatile environment, this will help you out to smooth out your numbers because the expected Sharpe will get skewed. Now also here you'll notice I've got the method on how the portfolio methodology to get a higher ranking. So in this case we're using minimum variance portfolio, long short, and then in here I'll probably add in the weights of these four pairs that I need to achieve hopefully this expected return. Okay, so that's generally the big changes that I've made to the script, but there's going to be a lot more. So the trend is the big one that I'm using right now. Also, that has a big impact on this overall pair ranking, and then obviously that changes there's actually another spreadsheet here I want to show you. Doesn't look like it. No, that's good enough. Anyways, so those are what I'm using right now. A few things to note also. The markets right now, this data set is from yesterday, so today is March 7th, so that'd be March 6th, 2018. And what I can tell you, just looking at the 1 year data, the data reveals the markets are kind of screwed up. It's just there's really I could see the pairs that are not moving. I do see pairs that do move over a short period of time, let's say a month, and then it comes back off and then it goes back up. So there's no real long-term trend, which means a lot of the pairs are highly volatile. Also, if I compared it with just under the 500 day time, what I could see is clear uptrends, like long-term trends. But then the markets have just gone into this really screwed up environment of just highly volatile. There's no long-term uptrend or up momentum that I'm looking for. And if there is, it's very, very minimal. Also, what I'm planning to do, if the markets continue with that, there's two options to inflate your return. You can either use leverage. I think that's a very high risk when the markets are in these unpredictable states. The other option is, if you're going to continue to trade in forex, is to use fundamental analysis. I have a number of scripts that I have that will use federal or central bank data, as well as trading relationship data, as well as economic data, to overlay the calls on the forex outlook, meaning the bias, I guess you could call it, of short or long, and then combine it with other currencies with the same bias and try to gauge based upon the two currency biases and figure out where, forward looking, that you can get some trend out of that analysis. So that's some other option. And the other option is to look at, now remember, this is Dukas copy, so I can only trade really CFDs. The other option I'm looking at is moving outside of Forex and moving into the world of CFDs. For Americans, the or Dukas copy do not accept US, so there could be a problem there for Americans. But what I'm looking at is, at some point, as I move into, let's say, commodities or CFDs of some kind of commodity or treasury or some kind of global index, what I can do is I'll need to verify if the CFDs have the same behavior as the underlying asset class it's trying to mimic. And if that's the case, I can confirm that it is similar behavior. I can trade it and still go outside of Dukas copy and try to gauge on direction of the actual underlying instrument that the CFD is trying to imitate. So as a result, I may be able to trade some CFDs outside of that and work with, as I said, commodities or financial instruments like treasury or whatnot. So the thing is, if I do move into this, which is most likely I will, I want everybody to know about something that some people may not know. It's called a bar chart. If you look up most active futures for the futures contract, and we all know that this can be used for direction for the next trading day. What you'll notice here is this is at current time what the traders are, where the hot capital is going, the professional money in the futures market. So you can see here the S&P 500 still number 2. There is some yield getting the 10-year. Once it hits 3%, I think calamity will come. Crude oil, euro dollar, gold. So these are all defensive plays, basically what I'm saying. But here you can gauge where some of the currencies are being used. Euro dollar, for those that don't know, that is US dollars stored in euro in European Eurozone banks. And then we have here other currencies, spot currencies that are used. So you can see there's a lot of movement in Japanese yen, so that's a good place to be. British pound, which I can verify, and the Australian dollar are the top 3. And the other thing I noticed with this, if this is right now at 9:28 a.m., this is when the U.S. markets are opening, or New York. If you were to look at this at night, you will see a total flip side of this. Meaning, most of what I saw a few nights ago was there's more movement off outside of trading hours, where a lot of this was moved into agriculture. So, number one was corn and other similar agriculture products. It was quite the flip when I saw sugar was up there, live cattle, soybean was in the top, let's say five. So, I want you to be aware of that, where agriculture is on the move during off hours, it seems. But just wanted to let you know about this and some other stuff as well. Okay, hopefully that'll help you out and you get a better understanding what I'm trying to do here. Later.